Hi students, so this lecture for BBA 4th SEM on corporate accounting second. In the last class we discussed one problem, okay, so which is the A limited and the B limited. The A limited absorb the B limited. It means what? The A limited takes over the business of B limited for the purchase considerations of rupees 35 lakhs. Okay, so we saw that problem as well as we assert it, means the lump sum purchase consideration is given, as well as we prepared some accounts, as well as we passed the journal entries in the books of the transferee company, which is the A company, under the pulling interest method. Okay, so these the transactions we saw. Okay, so now this see the note, this very is important. The notes you have to understand for the entry number 1, which is this general reserve account balancing rupees 87,500, how it came. So now see here the note number 1, excess purchase consideration over share capital of rupees 8,75,000. How it came 8,75,000. So now see the A limited take over the B limited. Okay, so it means what? It means actually it means what? The A limited given to B limited is rupees 35 lakhs, and B limited is having the share capital is rupees 26 lakh 25,000. It means what? The excess amount is paying by the A limited to the B limited is rupees 8 lakh 75,000. Okay, so the A limited is giving to the B limited rupees 35 lakhs for this business for take place, and but the B limited is having the share capital is rupees only the 26 lakh 25,000. The difference is rupees 8 lakh 75,000. Okay, so now this 8 lakh 75,000, it's they are going to adjustment within the general reserve and the profit and loss account, the profit balance. And in the problem given in the note, the general reserve of the B limited is rupees 26 lakh, sorry, 2,62,500, and the profit in the note is given is rupees 5 lakh 55 lakh 25,000. Okay, so this is the is given, and the total of this 2,62,500 plus 5 lakh 25,000, the total is what? 7 lakh 87,500. Okay, the this much again capital, it means cash is there, or the fund is there with the B limited. Now they are going to adjust with this extra balance rupees 8 lakh 75,000. Now see the note number 2, which is the capital loss adjusted against general reserve of A limited is rupees 87,500. Now see this, how it came the 87,500. So this 8 lakh 75,000 extra paying to the A limited to the B limited, and again this going to adjust in the general reserve and the profit and loss account. The 7 lakh 87,500, just you have to minus from this 8 lakh 75,000, remaining amount is what's 87,500. It means what's this is the capital loss. Okay, it is a capital loss for the A limited because extra paying. Okay, this 87,500 is extra paying by the A limited to the B limited. Okay, so now see the balance sheets, how it's prepared. Okay, so we have to prepare the balance sheet for the A limited. So equity and liabilities. Okay, under that shareholders fund, the share capital note number 1, the share capital note number 1, how it came this 70 lakhs. Just see note number 1. So 7 lakh equity shares are theirs, and each share is rupees 10. Okay, so how it came like 7 lakh equity shares, 3,50,000, sorry, 3,50,000. Okay, so these in the balance sheet, see in the balance sheet of the A limited, this is the share capital rupees 10 each, and A limited is the 35 lakhs shares are there, 35 lakhs share capital is there, and each share price is rupees 10. It means what's 3,50,000 A limited shares, and B's limited also 3,50,000. How it's 3,50,000? Because this now sees A limited takes over the business of B limited for a purchase consideration of rupees 35 lakhs. Okay, so it means what? Just convert into the equity shares. the each share price is rupees 10, then how many shares? The 3,50,000 shares. Okay, so again these 3,50,000 shares, the total is what's the 7 lakh. Okay, so 3,50,000 plus 3,50,000. So this purchase considerations you have to convert into shares. Okay, so this 3,50,000 plus 3,50,000 total is the 7 lakh, and each share price is rupees 10. The total will be the 70 lakh. Okay, so this is the 70 lakh is taken. Equation next, reserve and surplus. Reserve and surplus, just see 35 lakhs. How it came the 35 lakhs? Reserve and surplus. General reserve of A Limited. The A Limited is general reserve is having rupees 14 lakh, and now this capital loss. Okay, so after here the B Limited is having the general reserve, but it is adjusted in the capital loss. Okay, after adjusting also there is a loss for the A Limited. So this loss you have to minus from this A's general reserve. Okay, so 14 lakh minus 87,500. You know that how it came the 87,500. Just see here 87,500 note number 2 how it came. Okay, already I explained this. Okay, so this like this 87,500 we have to minus, remaining amount will be the 13,12,500. Profit and loss account, it is also the adjusted of the B Limited. Just only you have to take the A's Limited 10,50,000. Next, the development rebate reserve 1,75,000 for the A Limited plus 87,500 of the B Limited. The total will be the 2,62,500. And the export profit reserve for the A Limited is rupees 5,25,000, and for the B Limited is rupees 3,50,000. All these things are given in the note. Okay, just see in the problem 8,75,000. Total amount is rupees 35 lakh. So it is taken in the balance sheet as a 35 lakh. Okay, so now see the in the balance sheet the current liabilities under the trade payable. Okay, note number 3, just see here note number 3, trade payable, the creditors, the for the A Limited is rupees 17,50,000, and for the B Limited is the 17,50,000. It's a total is the 35 lakhs. Okay, so now all the liabilities are covered. Now see the assets, the non-current assets, tangible fixed assets, note number 4, which is the, it means what's now you have to combine, make it combine whatever the in the note given the problem. Just we have to make the combine. A Limited, A's Limited the land and building, and the B's Limited of the land and building you have to combine, and you will get the value of the tangible fixed assets, as well as the inventories you have to combine, trade receivable you have to combine, cash and cash equivalent also you have to combine in the note. Here all these things are given in the note, and just try to understand. The total will be the balance sheets of the equity and shareholders total is rupees 1 crore 40 lakhs, and the same asset is also the 1 crore 40 lakhs. Okay, so like this you have to solve the problem. Okay, so in the next class we will see the purchase method, how to pass the journal entries under the books of the transferring company, means the A's companies, under the purchase method, as well as how to prepare the balance sheets we will see in the next class. Okay, just all of you note down the problem in your notebook. Okay, so thank you.